Hey, welcome to another video. Sorry I didn't do one on Friday. I was stupidly busy. A lot happening in my world. We've got a London event for my company, so it's taking priority, I'm afraid. So let's talk about a few things. I want to teach you how to win at the next bull market and bear market. Now, I'm going to talk mainly about the end of the bull market into a bear market, what you should be doing as an investor. Please do subscribe, please do like my video, please get people seeing this shit because people don't do it. People are now in a hole, and I want to teach you essentially how to get out of that hole. Very, very simply, it is a very simple method. It should be a one that you should be doing anyways, but the problem is a lot of people do the hold on, fuck off, bollocks. It's shit. Don't hold your coins forever because it's bullshit. You need to be averaging your shit down, and what I mean by that is it's very, very simple. You bought Bitcoin at 20k, who would? You then buy a load up 3k to average that shit down. So when it does eventually come down, you know, the profit levels go from up to the fucking top down a bit. So that's what you got to do. And I find that more people don't want to do this. Now, I've mentioned it a few times that people don't appreciate what we've got. This is one of the greatest investment opportunities of our lifetime, and it must be fucking seen as that. People are looking at coins thinking, wow, it's doing amazing in a bull run. And then all of a sudden in a bear market, it's a piece of shit. It shouldn't be touched because the price is low. Don't get it. If you do your research, you have a real good look and see that, you know, that real use case is still there. They've still got utility, they've still got the team, they've still got all the partnerships. Still a good fucking investment. Fuck off the price, doesn't matter. Who cares? It is what happens in the next 3 to 5 years is what we're worried about. That's what we need to do. So you need to be accumulating this shit now. If the market goes bang, at some point it might do. You've got a load of capital there to cash out. You go, okay, cool. And then what you do is you sell at the top in fiat or tether, whatever. And then you keep it sitting somewhere and then you put it back in at the bottom again. Repeat the process. Accumulate. That is how whales got a lot of money, got a lot of Bitcoin. It's obvious how they did it. People don't. So all the new people here, welcome to the world of cryptocurrency. It's fucking crazy. Please be aware that this is all information, not investment opportunity advice. Please be careful. What I will say though is this: you have a much better chance of getting yourself out of a hole if you buy a lower or buy more low than you did at the high points, and I'm going to prove that. I'm going to show you exactly why. The amount of coins that you can buy at the floor compared to the top is fucking huge. So for example, Electronium, if you bought at like all-time high, you wouldn't get much for your money. If you bought now for a lot less than what you would have invested in all-time high periods, you get so much more coins, and it would be ridiculous to think that you could bring your average cost ratio down to the fucking floor. So be aware of that. So let's talk about a few things now. I want to jump on a chart first, just because I can, and I want to show you a few things. Now, this is what people are scared of. They're scared of this. They're scared of selling. They're scared of fuck. What? Honestly, guys, if you have found that you've bought in a bull run and you're buying at the top. So for example, I was echoing in my group on the crypto mob. If you buy in high supply coins, Ripple on the screen here, XRP, and it was already $3, the chances are it is heavily overbought. Massive supply, massive volume is big price action, okay? It goes up. It's got a lot of multiples. It came down to 21 cents, guys, from $3.80 or whatever it was. I can't remember. So when you're buying at the top, and then, you know, it's massive difference, okay? So be very, very wary. So what you need to do, go on the 3-day or the daily, and you are looking at the higher time frame EMAs, okay? So these are the peaks here. Bosh. You're looking to get out of this sort of coin at a certain point. Now, this is in BTC, so it's probably not the best example. So let me just change it to USTD. When you are doing sort of stuff, you need to be looking at the average in, you know, a stable currency, because when Bitcoin went up to the moon, the fiat values are reflected heavily in the altcoins. Now, when you look back and you think, well, if I go back to that chart right now, look at Bitcoin there. You know, we are currently at this red line here. It's not well, it is higher, but it's not massively higher comparing it to the fiat value. The fiat value is astronomically different. So let's have a look. So if I just go on to Bitcoin, right, simple, USD. This is Bitcoin. Oh, hello. Some old shit, look. Old educational bollocks. I teach for a living. So it's simple. You go on the daily chart and you want to discover. Now, if you want more information about this, check the links below because I've got all kinds of courses on this shite. Simple as that. You're looking for these trends. You're looking for the bigger EMAs and moving averages, and you're going to use them as a guide. That is 100. That is a 200. Simple as that. You want to be selling when it goes beyond this area and when the candlesticks are below them, because that signifies a trend change. Get out at that point was 11k. Get out at the EMA 55 was 13. Get out the EMA 20 was 14. And then you can be higher as whatever. So, if you are buying from, the simples of, if you're selling here and you've not re-entered the market yet, 74% gain on position. You need to be thinking about this, guys, on the next run. So that's one bit of it. Now let's talk about the next bit. Let's look at these coins here. Let's go back to like page 4. We'll find something random. Let's find a random coin because it's fun. When you are thinking about, right, I've just bought into, let's find a coin that's been around for a while. Let me find one that is actually useful. Maybe useful, maybe not. I don't know. We'll see. But either way, there's a lot of coins out here. LA token. Let's have a look at LA token. Reason being, someone just messaged me about these this morning. So we're looking at these and thinking, right, cool, awesome. Oh, wow. You got to look at that and think, well, if I sold there and rebought there, doesn't matter if you believe in it or not. It's the element of, right, I've got $100 spare. Let me see if I can get myself out of this little hole I've got myself into. Yeah. So that's what you got to think about. That's what you got to concern yourself with. Now let's have a look and let's get the calculator out because we all love a calculator. Let me find it. Calculator. So how does this work? It's quite simple, and I've got a spreadsheet for this, and I'm going to show you in more detail. Now, if you are buying at, let's find out all-time high first. We'll say, what was it? 149. We'll say we bought at 130. Okay, random. So you've bought $500 worth. You divide that by 130, 135. You'd only get 370 of these coins. Okay, these tokens, and you bought the fucking top. Fuck! What a mistake. Oh, it's come down. It's now worth 6 cents. Oops. So that's what you got to work with, right? So you got, 370 is an easy number to remember. But if you bought 500 again now, not saying do it, but theoretically, okay, this is where things start happening. You divide that by 0.0, we'll say 6. You get 8,333 of them. Okay, scary. So say for example you bought that much. You got your plus your 370. Wow. You've now got that much, okay? That is your total bag, $1,000 investment. For you to get a return on investment, this coin literally doesn't have to move up much at all. If you think about it. If you are thinking about it in terms of, well, where does it have to go? If this goes to 10 cents, which is only 4 cents away, you're nearly back in profit. If it goes up to, say, I don't know, if we go back into, what was it, 80, it was 87,000, wasn't it? Give or take. If this goes back up to even 20 cents, okay? For $1,000 investment, you don't have to go as far. Whereas if you bought and kept what you bought, that $500 at $1.35, you'd have to wait for it to go over $1.35 again to get your return. It's a massive difference and a massive shift, okay? So that brings that $1 average basically to $1.35 all the way down to maybe, I don't know, well, it's down to blooming 15 cents, give or take, we'll say. It's down to that area to get profit again. crazy. So let's have a little look at this spreadsheet, okay? It's not the greatest, I'll be honest. I found it online, I got it, I connected it. It's easier to work out. Now, that is just the simple lines of cost averaging. It's like, if you believe in a token, do your research again. Check it out. Is it a real use case? Have they still got partnerships? Are they still functioning? Are they still on exchanges? Have they got volume? Cool. Some coins are out there, they've got decent volume. They just don't, well, I say decent volume, okay volume. They've still got good 6 figures coming through it every day. You've got to look at it and think, well, it's worth a punt. And that's what you got to look at. So let's look at a random coin. Now, this is just an example. Well, I don't know. Ethereum. We bought it on Binance, boom, and say over the next 6 months I want to invest 1,000. So if the first time you invested was 1,400 euros, example, it's crazy. You wouldn't get much for your money. If I look on here, 0.11 Ethereum, cool. But then obviously it starts declining. It goes down to 1,000. Then we go down to 800. You know, this is just random made up numbers, by the way. But it's not too far away from the truth, is it? Let's be honest. So this was what it would look like. So the rule of thumb is this. You buy less at the top. You buy more at the bottom. Obvious. So honestly, if I was you and you bought a coin at the top, have a look to see how much it would cost to get the exact amount of coins that you've already got at the bottom. I can guarantee it won't be much because of the difference in price. Certainly if you're that type of person that's held on since all-time highs, $98 sort of, 98% sort of losses kind of thing. Scary to think that. So that's kind of what we're working with. This on the screen shows you that for every month that you've been buying in the dips, it averages down that your cost average will be 733. Now this isn't 100% because if I play with it too much it breaks. It's not the greatest of spreadsheets, I've told you. But it shows you on paper exactly what it does. Now this shows you that you can get more coins for your money, obviously at the bottom. But people don't do it. People just don't even entertain the idea of investing again. They are shit living scared of it. I understand why, it's fair enough. But I've been accumulating coins all the way through this bear market. Because I sold, not all, few of my positions at the top. I sold Electronium, as I mentioned. I've sold Alexia. I sold, what else did I sell? Rupee. I sold random stuff. And I also sold when there were some coins in losses to damage, stop damage limitation, like a quant stamp. Sold that in profit. Sold U-Trust in profit. Sold BitDegree in a lot of profit. Like random shit coins that weren't going to do anything. And I just left it in a stable currency, and I've just been gradually accumulating good coins like VeChain, XRP, Expire. These are coins that I believe that will do well longer term. XRP, for example, I'm not the biggest lover of it. I just think it's going to do well. I just think it's going to FOMO again and just catch everyone out and go bang, take my profits. Thank you very much. Accumulating from 30 cents down to 25. Pretty smart. So that's kind of what I've been doing. But the fundamentals of this is risky, okay? It is the most, it's not the most, it's only risky if you're trying to flog a dead horse. Like you've got a shit token that's already been delisted off Binance and it's shit and it's pointless, leave it alone, just fucking don't bother. If you've got, say for example, Cardano. Now let's have a look at Cardano. So Cardano, right, let's talk about it. One of the best projects out there, in my opinion. Also got the biggest opportunity for return of investment, okay? This has been heavily smashed. Now, you look at all-time highs, it was about $1. It was $1, over $1. 4 cents, okay? If you bought all-time high, I know people that have bought in this sort of upper-end region from this period here. Scary to think that you could make a hell of a lot of money from a literal re-buyback at the floor. Now this, in my opinion, is a very good time to buy. It's the sort of region where you should be starting to buy, and if it goes any lower, just keep accumulating little bits. Now, you could argue buying the dip is stupid. Yeah, buying the dip is stupid when you're in a heavy bear trend, which was down in February, March, April, May, June. The heavy bear trend of altcoins has kind of like not really been that, you know, it has been progressively getting worse, but it's not as bad as, say, for example, dropping from 64 cents down to 35 in a matter of 4 days. Whereas this is like progressively just like kind of up and down. It's it's quite averagey. If you look from October, so 7 cents, 7 cents, 7, 7, 6, 6, it's not as bad. It went down to 3 cents or 2 cents at some points, but you've got to look at it from that point of view. It's not moving much, okay? In terms of percentages, yes, it is, but it is, okay, now if you put 1,000 at 64 cents and the next week it's 34 cents, you'd be like, oh my god. It's a bit different when you've got a load more coins and you can buy more and you feel more comfortable at the bottom. So that is the lesson for today. It is a big one to get your head around. Cost averaging is a massive important factor in the stock market. People say the old famous quotes of like, people get greedy, and they do. They buy at the bottom. They get greedy. They live on fear. They live on this fear of people selling in losses, and then they buy it low and just keep buying all the way down to the floor. And then eventually, when it goes, they can just have a massive bag, and then they can get rid of it at some point. That's what you do. So I've been doing it. I've managed to get a lot of my investments down to a decent investment price, so whatever happens, happens. I am pretty confident with a lot of them. But the fundamentals of this is take profits next time. Seriously, do it. Put it into USD Tether. Take your skin out of the game, because when this bear market happens again, it will. There needs to be a bull run first, obviously, but there will be another FOMO run. There will be another bull run. There will be another way of taking profits, but there will be a monumental run. I'm not going to say it's going to happen this year, but 2020, come on. Bitcoin halving, it's gonna do something. It's got to. You got STOs this year. You've got a lot of cool news coming up this year. Things will move. They will not be at the floor for long. I don't think. If we're talking about this again in June, July, something's majorly gone wrong, and we're still at 100 million market cap. 100 billion. Sorry, 100 million. That'd be really scary. So you got to figure out that way. So look at it. Please look at your investments. Look and do research and think, right, I'm holding this coin. I really like this coin. I think it's pretty cool. Awesome. I want to put a bit of money into it. I'm just going to accumulate a little bit more. Just in case it goes bang, I've got a way of getting profit very, very quickly compared to, $1.50 when it's at 4 cents. That'd be an issue, wouldn't it? So there we go. Like, subscribe, share, whatever. Thank you. Awesome. Cool. See you in a bit.